Moving on to the S&P, they're all pretty much the same. So this is the daily. So I've managed to identify a support level down there and a couple of resistance levels further up. Obviously, we've got another major one up here, but it's too far away for me to put on for the moment. This is another S&P daily. Now, the only reason I've done this is just to show you where the markets come from. So, the market in March in 2020, after COVID hit us, really crashed and bounced from there once quantitative easing began. So you can just see how we kept making new highs and new highs and new highs until we got to there at the end of 2021. And of course, since then, we've had these sell-offs come in. We've got that luxury of having the Fed or the central banks there to buy assets. It's gone now. It went earlier this year, so it makes investors more cautious about buying the dips. So now we're sort of probably quite strategic levels of where we're going to go from here, if we're going to manage from here. And we're going to sort of move on towards this week we've got the ECB, then the following week on the 27th we've got the next FOMC meeting. So how aggressive are the Fed going to be with their rate rise? Are they going to stick at what everyone's expecting of 75 basis points, or will they copy Canada and go for a whole 1%? That is going to be a big question, and we're going to have to wait a little bit longer, 10 days, to get the answer to that. But it's going to be an important one because it's really probably going to set their stall out for going after that. If they go bigger, they may cut back. If they go with 75, they'll probably suggest that there could be another 75 after that. It's very difficult to see where they're going to stop. My concern is that they go too far with these rate increases, which is really punishing households on top of inflation. And that's really what's going to drive economies into recessions. This is the 30-minute, so I've put the pivot points on there. So as you can see, it sort of held around them on Friday again. Again, just closing above the second resistance level, as you'll probably see with most of them. Now we're going to move on to Nasdaq. So here's the Nasdaq daily, just slightly different because this is based on technical tech stocks. So sometimes you can have a slight difference with that, but they all tend to sort of pretty much follow each other to a degree, just not necessarily point for point, shall we say. But again, support and resistance levels are here, and another resistance level much higher up, just in case we get that breakout. On the 30-minute, the Nasdaq, see, this is what I mean by the Nasdaq didn't actually manage to get through R2 on Friday. That doesn't mean it's not going to carry on going up next week, but we're going to have to wait and see the data because that is going to start to determine which way it's going until obviously we get to the Fed meeting the week after that. With the Russell, again, small mid-cap companies have got a resistance level up here and another one down here and another support level down there. Again, this is the daily. So moving on to the 30-minute. So here we've got a sort of nice support levels down here. And it's sort of, as you can see, it tested the pivot point 2 or 3 times. Great buying opportunities there. And then managed to break through and get close to testing R2, but didn't quite get there on the day. Okay, so currency-wise, this is the pound against the US dollar on a daily. It's still negative. It's still in a downtrend. Personally, I don't want to buy the pound. I just can't see anything that makes me want to do that at the moment. With got a prime minister who's no longer really prime minister, he's a caretaker. We've got about 5 ministers battling each other in not a very nice way to take over from him. And I'm not sure any of them are going to do a good job. So, we're going to have to wait and see. But the dollar's so strong, and I don't see any reason to buy the pound at the moment. That's my personally. On the left there again, I've included it. You can see where it got to in March of 2020 when COVID hit. So we still haven't quite made that level yet. So possibly we'll test that sometime soon. Here, this is the 30-minute. Again, I've managed to get a couple of support levels in there, but it was quite sticky for most of the session around the pivot, and then finished that little bit stronger towards the end of the session. But as I say, I'm just not convinced for the moment. Moving on to the euro. Now, this is the weekly, not the daily. And the reason I've had to do that is because, with it being under so much pressure, it's broken through pretty much most levels. So I just thought I would highlight, this is the inception of the euro as a currency. And so here you can see where it sort of had that massive rally over time, but that is obviously over years. And then that steady sell-off ever since. And of course, since COVID, the dollar's really strengthened, and I just can't see that changing for the moment. So again, my personal strategy when it comes to the euro against the dollar is I always want to sell the euro against the dollar when it rallies. I never want to buy the euro against the dollar when it sells off. But again, just telling you that's my strategy, my philosophy. That doesn't mean that I'm telling you to do it. Okay, so when we look across at the 30-minute, I managed to get in a support level there, just with the pivots, and of course we've got a resistance level that it's going to come up and test. But is it going to hold there? As I keep saying, for me, I've been bullish of the dollar for over 2 years, and I just can't see that changing for the moment. And I've definitely not been bullish of the euro or the pound, because I just think that, what's going on with Russia and Ukraine, especially, it's going to impact the eurozone for a lot longer yet, and it's going to keep inflation higher. And it's going to be problematic. It's as simple as that. Again, when you come in towards the winter, are they going to have managed to have obtained enough gas supplies, or are they going to be rationing? Are they going to be cut-offs and such like? Okay, it's a little bit in the future, but the signs aren't good for the moment. Bitcoin. So this Bitcoin daily. As I said, it's managed to sort of just find some sort of balance, some level for the moment, and just hopefully it can stay around this 20,000 and build some support from there. Hopefully it can. And then when we look at Bitcoin, there is actually a brown line here that I've put in for a breakout, but obviously that's a bit higher. That's at 23,300. And if it gets through there, then maybe it'll move up towards to test that. On the 30-minute, it's again sort of got rejected at the pivot level, and it just ranged most of the day up between the pivot and R1. So steady close. Let's just hope it can keep there. So here, this is Bitcoin against Nasdaq, as I show most weeks now. It just sort of highlights. You can see the shape that they are tending to follow each other. It's a loose relationship. I wouldn't call it a perfect correlation by any means, but it just gives you that overall idea. So if stocks can bottom out from here, if stocks can go up, big ifs, but if they can, maybe that will drag Bitcoin up higher. I think that the Bitcoin being down is for a number of reasons. Obviously, the problems with stable coins. I think people haven't got the luxury of holding on to crypto at the moment if they need money to pay bills such as food and energy. So, that is potentially a luxury, and they're needing to exit some, if not all, of their holdings to be able to do that. Yeah. Also, when we look at it, there's NFTs and there's the metaverse as well. So, I think some people have switched out of the coins themselves and moved over to the other digital assets. Okay, so now just moving on to gold. So gold's been very much out of favour. Again, the risk appetite is coming back a little at the moment. We'll see how that pans out after the Fed meeting on the 27th. But at the moment, we're seeing this. I've put on the Fibonacci levels here, just so you can get an idea. When we look at it, we're coming down, and we're very close to testing the golden ratio, which is the 618 level. It's the most popular with analysts and chartists because if it comes down to here, all the time it holds above there, it's still a retracement. If it breaks there and it holds below there and goes substantially anymore, I would say it needs to probably get through these points here and close there to convince me that it's going down further. Then it'll go from being a retracement to being a reversal, which is why sort of analysts take a lot of attention of this key level. And then as we move on to the 30-minute, finally moving on to WTI. I do like trading WTI, but to be honest, at the moment it's sort of mid-levels. It's not really sort of giving me much to trade around. If it sort of gets back above 105 at 110, I'll probably be considering selling it. To buy it, I'm going to be looking for these support levels, but I'm going to be cautious about buying it. Again, oil, yes, at the moment it's that everyone's saying that there's a shortage of it. There's not that much being held in reserve, but I don't necessarily agree with that 100%. So I'm going to be a little bit cautious. And also, any signs of recessions really becoming more and more on the cards for the future, whether it's the end of this year or early next year. If we're going into recession territory, for me, that's going to reduce demand and probably quite a lot. People will be much more cautious about their spending. This is the 30-minute for WTI, so I've got just a slight down channel there. But again, we'll see where that opens and what direction that wants to go. I just think with oil, a lot of it's going to be down. If it can hold these sorts of prices, it's going to be based on whether we get a recession or not. If we see a recession, then I think demand will be reduced. If obviously on the other side of that, if the war sort of goes to the next level, then you could see oil go up. So it can go either way at the moment. So I'm just going to be very cautious with trading oil at the moment. I've usually got strong views, but just not at the moment. So finally, just want to mention our services, Symax Fintech services. We provide a daily newsletter which goes straight to your inbox each morning. In that, we include chart levels, which includes the pivot points. It's got global news, my views, and it's just helpful. It sets you up for the day. And there's the link for that. Workshops, we provide daily one-day workshops to help you either get into trading and understand what it's about, or to improve any areas where you feel there's room for improvement. And then we do courses which can be anything from 1 week all the way up to 4 weeks. And these are really to sort of help you to hone your trading skills and get on the way to sort of hopefully becoming a professional trader. And again, you can see the calendar and the content that's involved of what we actually pass on to you during those. Trader mentoring, so if you're at a certain level but you want to progress to the next level, I can certainly help you with that. We do a serious amount of consulting to companies, to exchanges, to brokers, and just to traders in general as well. Some of it's about providing educational content, other parts again is providing courses and workshops. If you've got any questions at all, please contact us at the info@symaxfintech.com. If you've got any questions that you would like to direct personally to me, my email is below, chris.tubby@symax-int.com. Thanks for listening, and I wish you the very best of luck for this week. Have a great trade.